Okay, good afternoon, everybody, and welcome to today's edition of Ask the Experts. My name is Capolingua. I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be with you as we delve into the depths of your portfolio, try and keep those winners, kick out some of those losers, and maybe find some new ones. We'll do that after the disclaimer, which says that the content of this presentation is general advice only. It has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general advice, you should consider it very carefully or seek the help of an investment professional. The rest of the information in that disclaimer is important, and you can read all about it if you download our product disclosure statement from our website. Okay, over to you. Pretty simple and straightforward here. I know a bunch of people have already got into the chat window on Zoom. For the Zoomers, I know I've got a bunch of people watching on YouTube, on Facebook, on Twitter, and on LinkedIn, whichever way you can find the message box there and send me a message, and I'll do my best to give you a technical and fundamental reader on any security you're interested in. So it could be stocks, it could be crypto, could be indices, could be anything. FX. Okay, that's not what we wanted to see. That's why I was complaining earlier on. But we'll get back to that. This is where I want to go. This is the charts. First in, best dressed was Gary. Today tends to be that way, doesn't he? That was the Nasdaq. Referred to the weekly market analysis session, which I posted to YouTube yesterday for all the analysis of the macro themes, all those indices, commodities. I've already given you that analysis. Hey, if you want something else, I'll follow it up today. SOP, wow, from Gary. What a ripper. And in what is a terrible market today, and really for the last few days, it's so refreshing to see a chart that looks like this. And you know my theory on these sorts of charts. I love them. And I'm happy to hold this one. Probably you're thinking, Carl, he's going to say buy this one. I'm very close. It's just a little bit far away from my light green zone, which is the short-term trend. I like to buy things near that zone with really nice price action signals. What is a really nice price action signal? Well, that candle's really nice. Let me turn that off. That candle's quite good as well. And when you see the combination of these two candles, the lower shadow plus that white full candle, very, very positive indeed. When they're coming near the green zone, even better in what is already a well-established long-term uptrend. So happy on all of this. The other good thing, of course, here is that it did break through this point of supply, and we can see how these supply zones work. So this is what we call a point of supply. It equals a supply zone. It is an area where we expect investors who own the stock to be supplying, and quite often we have these first tests of the supply zone. We don't get straight through it the first time. Sometimes we even have a second test. There you go, right there. What a great case study this is. And often it's on the third attempt that we deplete the supply there. And with the demand in the system and the supply gone, it's simple economics, price can go up. So happy holder here. Let me see what it does. Maybe another pattern like this. So if we can see this pattern again, okay, this pattern here occur again up here, somewhere up here, then that's where I'd be happy to get in. But for the time being, Synertec Corporation, great name. I've no idea what they do, nor do I care. All I care about is the fact that the market, who does know what these guys do, doesn't want to sell them. Think about what that chart means. Whatever these guys are doing, the people who own their shares, they don't want to sell those shares. How do you know they don't want to sell those shares? Look at the price. It's going up. That can only happen when people are withholding supply. And the people who have cash right now, hard-earned cash, very nervous at the moment, but yet they're piling their cash into this one. Why? Because they know it's good. I don't need to know anything about it. The market knows everything I need to know. Okay, thank you for that one, Gary. I'm going to guess it doesn't have any fundamentals, but I am curious because the chart does look so good. Let me do this, and you'll notice a bit of a change today from our spreadsheet. Number one, everything looks a bit bonkers because it's got hashtag calc everywhere. And the other thing is it's now powered by FactSet, who are the new data supplier that I've chosen to power us through 2023 and beyond. So there is a little bit of teething that is required here. For example, I now need to click this refresh button. It takes a little bit of time to refresh, but I will persevere. I won't go into all the reasons why I made the switch, but I did make the switch. That is, and you can see here, I'm in the process of building a button that does that for me, that refresh button. And I'm not very good with macros, so it's not working yet. If I press it, nothing happens. And I know there are people who are experts on macros shouting at their screen saying, Carl, I could knock that up for you in 30 seconds. We do have some broker data here, but it's only coming from the one broker. So we're not going to read too much into it. But we do have that one broker, and they do have a positive rating. Now, positive rating previously for the Icon spreadsheet, we'd have strong buy and strong buy. Well, brokers aren't always that simple. So often they'll have something like an add or an outperform or an overweight. Some of them will have specifically buy or strong buy. And so this is just lumping anything with a positive rating together, anything with a neutral rating, and anything with a negative rating together. So I think that does simplify things. Obviously, they're in there, and they do have a price target of 27 cents, which is not that far away from where it is right now. Fascinating company, and a company I will no doubt look into after today's session. But given our time constraints and the fact that I've got 100 messages here of different stocks to get through, I won't be able to do that today. So apologies. It is the nature of the beast, which is Ask the Experts. By the way, this is the last one for the year, but we will be back. I'm thinking January 16 for the next one. Hi, John. Hi, Sharky. These are the streamers over on YouTube. John's asking for LRS, BKW, CXO, and LTR. Look, let me do the lithium review, okay, because that'll head off a bunch of questions for later on. I'm going to do them alphabetically. First one I can think of alphabetically is Allkem. Actually, there's Argosy. Now, we have been talking for many weeks now about how the trends in lithium, or our ASX lithium companies, are looking quite a bit under pressure. Why? Well, we had that Goldman Sachs report, didn't we, saying that prices are going to be softer as early as 2023, and most have been expecting, yes, we're going to get a period of softness as this huge wave of supply comes online, probably around 2025. Okay, so Goldman Sachs have, I guess, refocused the market's attention on when that supply might come in for a bunch of different reasons. And this really almost since that, it's almost been self-fulfilling. This is the lithium carbonate price. And there are many lithium minerals. I know you know that as well. And this is just the one I can get the most data from and the most accurate data from. You can see the bunch of dots here and how that has been turning up and starting to accelerate to the downside. But predating some of these moves in lithium. Okay, so lithium carbonate, actually, coincidentally, one of the more important lithium minerals for, and I have changed that Amy Broker webcam. I just looking at the stream here, it's a little bit behind. The best place to be is Zoom. I think that's the one that works the best for anybody on the stream, because sometimes internet connections aren't always 100%. Okay, Allkem. Long story short, we've been looking for weeks at how the trends have been turning. You're going to see in a bunch of charts that we are going to show lots of these minus 1/3 that are around the place, simply because you have changing trends. And just to draw, much of Ask the Experts is about, I guess, well, this is my opinion for what it's worth, but a lot of these sessions, they need to be about showing you bits and pieces of technical analysis, of trading, trading methodology, things that I've accumulated over the years that hopefully can help you. But you can see here we've got what is no doubt now an MPOS, major point of supply, and then you've got your minor points of supply in here, and you can see how each point of supply is lower than the other, and that's not great, because that means supply is building and demand is not substantive enough to absorb that supply. And then when you crack through your middle troughs, that's usually a pretty good sign that things aren't 100%. The other thing is this big black candle. So we call these, you've heard me call these MSEs in the past, so major supply events, and they're just big black candles. And when you see them, generally we don't muck around with Mr. In Between. When we see those, we just go minus 1/3. So I can see, I know this is past tense, but we have done these in the past. I can see a reason for minus 1/3 there, minus 1/3 here, and really the last third of Allkem is probably getting knocked out. I'm going to suggest to you on that day there where we close beneath this trough here. So long story short, I can't see a reason to be in Allkem at this point in time. That doesn't mean Allkem isn't the greatest company in the world. I know many of you would love to sit down with me and explain to me over the course of many hours, many cups of tea and many milk arrowroot biscuits, just why Allkem is the best company in the world. But I'm really not interested in that. All I can say is that regardless of what you think, regardless of what I think, the market is showing more supply than demand. Now, this isn't to say that I won't be back in Allkem at some stage. I mean, I think it's a pretty good company too from my research, but I'd need to see it start to do something like this. And I'm quite happy to be out of it and let it go back up $1, $2, $3. I don't care. This is not how I keep score in the markets, and it's not how you should keep score. You should never keep score by saying, I got out at $10 unless I can buy back less than $10. I will never buy this thing again. And you are going, hey, Carl, I don't think like that. Nobody thinks like that. No, you're saying, hey, Carl, that is me. You've nailed me. That's exactly the way I think about stocks. That's how I keep score. I keep score on my stocks based upon where I got in and where I got out, and all that emotional baggage tied to those points. No. It's irrelevant where you get in and where you get out. All that matters is you're giving yourself the greatest probability of making money by following demand and supply and when they are in your favor. So if I'm out at, I don't know, whatever I've suggested to you, this is about 14, this is probably another one about 14, this is a one about 13, and if I have to get back in at 15, who bloody cares? If it takes it to get to 15 to show me all of these signs that demand is coming back in, let it get to 15. It doesn't matter. They're just numbers. Don't keep score like that. Keep score by looking at your P&L curve over a long period of time. AGY is the next lithium company. You can see we've got some scratchings on here. We said if it closes beneath 58, then we're going to bang out minus 1/3, and it looks like it has done. Maybe today it's going to. So alert on Argosy. Okay, if it closes beneath 56, that's where we're looking. This is where we're thinking, demand is diminished enough, supply is building enough to tell us it could be a long time before this thing gets back up again. And I'm in stocks for a good time, not a long time. Okay, nobody wants to be stuck in stuff for a long time, unless, of course, hey, it's great to be stuck in something that's going up, right? But not stuck in something that's going down. So reiterating super cautious approach here, because we are, and since our last update, look at this, we're actually adding another POS in there that is lower. Demand is in the system. Make no mistake, it's not terrible, okay? This is not awful at all. The short-term trend is changing, a little bit concerned, but the long-term trend is still up. Again, it's a style issue as well. You might say, hey, Carl, I'm in this for the long run. Okay, well, maybe you need to be looking at weekly charts. Don't look at daily charts. Only look at the markets once a week. And if I was looking at this on a weekly chart, that wouldn't look any better either. It's the same signals, okay? Lower points of supply, black candles, and beneath that trough, it's lights out for momentum. Not lights out for the company ever being good again, but lights out for the momentum of this particular move. Okay, let us keep moving in alphabetical order, because that will take me to CXO perhaps, which we've been very bearish off. Buy 0% was my last comment on that one. Hold is 50% and sell was 50%. And hopefully you took the sell option because it hasn't got any better. And I can't see any reason to be on Core Lithium, as wonderful and as amazing as no doubt you think it is. Let's break with the alphabetical order, because I'm no doubt not going to remember them all. Our Liontown, you can see we've gone minus 1/3 here. And again, it's not about loving stocks. It's not about, knowing all of their intimate details. You're not married to them. They're not your children. You don't have to show any loyalty to these things at all. You should show loyalty to your spouse and your children, of course. They're the most precious things in the world to you. Certainly are to me. Not stocks. They're not precious to me. They're completely useless to me unless they're going up. And you can see here all the stuff that I like to talk about and all the reasons why, if I'm not around on a Tuesday, you could be going minus 1/3, minus 1/3, minus 1/3. I think the last time we talked about this one, we said maybe we're going to hang on to a third because it was just approaching the long-term uptrend. But even now, that's gone there. So ruthless approach for me. As soon as, that black candle, there's your major supply event. I wouldn't have been holding it after that, if you're still holding it after that, I would question why. Why do you come here and listen, right, and go, well, that makes sense, and then not do? What is that thing that's preventing you from making that step, from listening to doing? Okay, is it emotional? Is it an emotional aspect? Okay, because we need to take those emotions out of our trading. Okay, be emotional about your spouses and your kids. Don't be emotional about your stocks. Pilbara Minerals. Okay, lots of scratchings, lots of POSs. I'm a broken record, aren't I? But that's not a bad thing. That's a good thing, because that means there's some consistency about what I'm telling you. We've got minus. Look, if you've got a third, most you would have right now, this is the last time we looked at it, is plus 1/3. And I think based upon where that red arrow is pointing, that candle there, I can't see any reason to continue to be in that one. And I tell you what, I could be absolutely wrong. And tomorrow the stock could well be up here. And look, I'm happy for that to occur. I don't care. It's just not how I keep score. I will look at when the demand comes back in to enter lithium stocks for the next big leg up, which, hey, I hope we get. And it takes us straight up, 1,000% per annum until 2030. We should go to Sayona because it's very popular. Look, we complained on the way up how bad Sayona was, and on the way down, it's actually not that bad. It hasn't gone up, of course, but it's just not falling as fast as the rest of them. I can't see any reason to buy this one at this point in time, and the hold on the hold thesis is becoming increasingly tenuous, certainly beneath here. I think it's in quite a bit of trouble. And this is where I start to panic and think that I haven't covered all of the lithium stocks. LRS, it was the best looking one, wasn't it? Unfortunately, call it Goldman Sachs, call it lithium minerals prices coming off, call it whatever you like. The trend died. And unfortunately, that can happen. It could be a long time before this one starts to look good again. So it's not a buy for me. No, that's off the table. I'm struggling to call it a hold, just simply because it could be very slow and boring before it starts to look good again. And therefore, sell and moving to the sidelines is starting to look like a pretty good option there as well. Mineral Resources, we should do that one because we were holding 2/3, I think, here, potentially. It's still looking the best, but I think its grip is starting to slide as well. So just be careful here. Let me give you some levels if you're holding this one. So watch out for this level here. I think it's very important. I think a close beneath there, and you would be looking to do something like this. Okay, and certainly hanging on to, so I'm not sure why that's up there, but normally I do that. Normally I go minus 1/3 and plus 2/3. You'd still be hanging on to, but even then you might think, well, market's looking a bit rubbish at the moment, and maybe I'm just going to take a leave of a few of my stocks and see how things are looking around April, which is the next seasonal, wonderful, amazing time of the year. Refer to my seasonal analysis webinar I did during the week. Okay, we've covered a lot of ground there. IGO, another one which we've said, I think, at most 1/3 holding at this point in time. I think I said something like, hey, if it starts to do this, we'll start to, if it does this, back on board, right? But we're waiting for that to occur. I think the grip on this is becoming increasingly tenuous as well. Okay, I think that's becoming harder to justify. Okay, that is your lithium sector review. Stop crying. Okay, grab yourself some tissues, mop yourself up, and get on with it. Lithium bulls. Okay, Ryan, back into the Zoomers. RIG. Let's have a look. I'm sure I've knocked off a bunch of requests from later on. Ridley Corporation. Did these guys change RIG in the US? Okay, that's why I'm not understanding, because we need to go over to here and to here. And this is TradeView. I don't have US stocks in my AMI broker just yet, but hint, hint, there's a very good chance I'll be having them in the not too distant future. RIG, I'm guessing, is, and I'm not guessing, I know this is an oil and gas company, hence the name, Transocean there. I think it looks pretty decent. I'm certainly a holder of this one. I'm concerned that maybe this area here and this area here, we're seeing slightly building supply. But the fact that we've got this big white candle here, all happening in an area where I'd expect some demand, and the long-term trend is actually holding nicely here. I'm a happy holder. Where would that thesis change? I think on a close beneath that low there, and if I look at that low there, it's 365. Then I think you're going to start to scale out of this trade if you haven't done already. So you might want to watch that low there, which is 403. So maybe a close below 4 with a really nasty candle. Okay, and it's got to close there, not just tickle it with a lower shadow, but a close below 4 with a big black candle. You might knock out a third, just given that the broader environment is a bit nervous at the moment, and then looking maybe at dealing again below that low. Okay, that's for you there, Ryan, and thanks for giving me that you couldn't see it. Okay, here's the problem. You can't see it because it's in a different area. Let's try that. But you got the levels there, Ryan, and I'll just reiterate for you. It's not showing. It's not showing. Okay, because I had to go to a different, sorry, everyone, I had to go to a page that has not been set up in the streaming platform. Okay, but Ryan, hopefully you got those. That's why everything's black. Hopefully you got those levels. Might just, until I can figure out a reliable way to do that, I might just refrain and stick to the Aussie ones I've got on AIMU Broker. That's all. But soon, Ryan, soon we'll be looking at US stocks in here. PDN, Paladin, looking really sick, unfortunately, along with the rest of the uranium stocks. I'll show you the uranium chart in a second. Just, bumping around here, and that crack there is where you need to deal. And if I'm not around, you need to take a little bit of responsibility for yourself and say, hey, I'm not going to be a sitting duck. I'm not going to just sit on here and, look, unless your strategy is I'm going to hold Paladin to the day I die, but otherwise you've got to be proactive about these things and say, well, I've been taught how to use candlesticks and price action to tell me whether the market likes something or it doesn't like something, and I need to take some action. Look, I would say that your next pressure point is beneath here, and that's where you would be looking to deal again at -1/3. And it just needs to be a really systematic, really methodical type of analysis regime accompanied with an action regime. We just go, get the dollars and cents out of it, get the P&L out of it, and just go, this is what I have to do. Okay, I can't buy. No, buy's off the table. Hold, as you can see, hold is becoming increasingly tenuous, and I've given you areas on where you might be looking to sell. That one for you, Craig. Sorry. NIC. Sorry, because I know people are on some of these positions are hurting. NIC started to look good. This is the chart of the nickel on the LME. Okay, well, I said we'd look at some commodities, so let us do that now. There's the uranium price, so let me make that a line, and you'll see how Paladin and many of the other stocks in the sector have really suffered on the back of another false start, another disappointment. And if you've been following uranium for any period of time, you know what that disappointment means. And then nickel, I'll just show you the nickel chart very quickly if I can find it. There it is. So that's had a bit of a pullback as well. And if we go back to just keep that picture in mind as we go back to nickel mines, because you can see it's very similar. We've had that rally through here. It is starting to flatten out. I'm a little bit concerned. It needs to get back above this high very quickly, which is $1. I reckon that's not $1 and for 4.5. So a close above 105 and it's happy days. It could do that. Yesterday's candle was fine. But if it was to break beneath, I'll give you some levels here where I'm starting to get quite concerned about it. Certainly beneath this demand zone here. And you might say, hey, Carl, why do you pick that out? What catches your eye to make you say that that is a key demand, not just a demand zone, but a really important one? And it's these shadows. Okay, so look at these shadows. I'm going to just draw them in for you. So this one here, yep, this one here, this one here, this one here, this here, and the white candles that came off it. Okay, so what we're seeing here, we're seeing the fingerprints of demand. All that means is that there were some peaks out there with some moolah, right, buying. for whatever reason. That's what I get from my 13-year-old. Whatever, for whatever reason, whatever. Who cares? Whatever. But they were buying there. So here's the thing. Here's the dealio. If we get back there with a black candle, right? So one that looks a bit like that, which we know is all about supply. I mean, this candle is the epitome of supply. And close on the low beneath that zone, it's telling you that all of that demand is gone. Like anybody who was there, who was buying, they're done, they're dusted, they're in the market now. If anything, those peeps are now, this is what should frighten you. And this is why you should pay attention to charts, okay? It's not, tea leaves, hocus pocus on mumbo jumbo. This really should give you a kick. All of those buyers, all of those people who are supporting that price, buying, they are now part of supply. And I just got some goosebumps there because sometimes I need to remind myself of what these charts mean and just how visceral some of these signals are. All of these peeps who are buying, yeah, they're in the market now. That candle tells you they weren't there anymore. If anything, they're part of supply. What is that's frightening now. They're part of supply, and this is their break-even zone, right? So this is where they got in, and what it represents to them is break-even, okay? So what that means is once you're down here, right? Once you're down, this is why we say old points of demand, right, or past pods tend to act as future points of supply, okay? Because not us, but other people keep score based upon where they got in and got out, okay? And you can always rely on that. You will always be able to rely on the fact that other people keep score based upon where they got in and got out. So that is human nature. So if we crack beneath here, this area becomes a major resistance zone. Anyway, I probably went about 3 steps ahead. The bottom line is, if we were to get beneath even that low there, which is 93.5, but certainly this low here, which is 91.5, then it is all over for nickel industries. But a great little instructional chart as well, just so I don't, miss an opportunity here. Let me go over here and try again. Fact set, refresh, and I might just might keep moving. Might come back to that because it'll take a little while to load up. Maybe that's the way we're going to do it. Okay, let's keep going on the requests here. RNU, which I learned from you good people who tweeted me and sent me messages. I don't know if you remember last week, we were talking about this and we said, I used the words, this is very mysterious. This price action doesn't make sense. And then people tell me, okay, they did a placement at 27 or 27.5 cents when the stock was at 35 and looking great. And it's very disappointing when management do this. I mean, I get why they do this. They need to raise capital so they can progress their projects, and that's what they're doing here. But to give such a huge discount to the new entrants, I think is very disappointing, and you should be very disappointed at that as well. So it killed this one. And the charts, unfortunately, when you're trading these small companies, you trade them always knowing in the back of your mind that the next heavily discounted capital raising is only just around the corner, because that's what these managements of these companies do. They take advantage of higher share prices to print more paper. And I couldn't see that one coming big. And that's why this was quite mysterious, because I would suggest, it's just a suggestion, that there were a bunch of insiders here. So there was plenty of demand still kind of fighting this, but the way the candles played out, it just looked like there were a bunch of insiders who knew that was coming, that were selling at a high price to buy back in that placement. So that one looks done and dusted, and maybe last week, without knowing what had happened, I did say minus 1/3, and you can see that was probably a sensible idea. Where to from here? I think you've got part of the trade remaining on the basis of this long-term trend, on the basis that there's a great project there that will come to fruition, and no doubt, I think at some stage, recapture the market's interest. But until then, I cannot tell you to buy this one because the chart looks pretty darn awful. Okay, let us go to Nickel Industries and have a quick look at the fact set numbers here. So they do have 6 estimates for Nickel Industries. 2 brokers are at a positive rating, so that could be anything from an add, an accumulate, an overweight, a buy, or a strong buy. Those are generally possibilities. Neutrals, literally they call it neutral or hold, or market weight or equal weight. These are all the different bits of language that they use. None with a negative rating, so that's okay. Site target is 17% from the current price. It's their median. Next place I like to go is the EPS line. I'm looking for growth here, so we can see it obviously became cash flow positive when I started talking about it a couple of years ago. 7.2, 7.3, 7.6. Locked in for FY21 because it's an end of year calendar year. So this was the current year, which will be finished in just a few days, and then we're going growth from there, which is, let me change this to 22, and we're going 14, 17. So great growth in the system, 17%. Risk level, don't know enough about it. Nickel prices, I mean, you probably could increase that a little bit and say moderate risk, just simply on some of the challenges for the global economy. But I think that's reflected in the target PE. So I'm actually going to leave that because the target PE is so low. I mean, it's crazy low. You could do some, this is fundamental analysis, everybody, isn't it? And say, well, probably 12 is a better or a better target PE for something that's growing at 17%. I could even go as high as 15 for that sort of growth, even with that moderate. And it's starting to, and again, I'm not trying to massage this, that's not my intention, but I'm saying moderate risk, global growth outlook, target 15, which is appropriate for a 17% growth rate, because the average growth rate on the market is about 6 or 7%, and the average market PE is 15. So why can't it have an average market PE with a much better growth rate? I don't think these are unreasonable numbers. And I would say that's something very similar to what the brokers are working off, which, because their price target is not dissimilar from the one I get. I don't think it looks expensive. And that's all I try to get to with my fundamental analysis. I say, well, that looks expensive, or that looks about right, or that looks a bit cheap. And that's all you can do. I think it's foolish, and I know many fundamental analysts out there, proper analysts that you see talking heads on TV, will say things like our valuation for this stock is $8.42. And they actually believe it. They say it with total absolute belief that the company is actually worth $8.42. And I just think that's absurd. But hey, whatever tickles your fancy, right? Whichever way you do it that works. I just don't think, given how anything can happen and all the guesswork you put into finding, coming up with a valuation on a company, you could say it's worth $8.42. Okay, ProMedicus, this one is for John. I think it looks half decent, but that means it looks half bad as well. And it's a function of what's going on in the markets. It was doing very well as the market was doing well. But we can see over the last couple of weeks, as the ASX 200, now let me show you the ASX 200, as it has stumbled, so too has a quality stock like ProMedicus, and nothing will survive if the market does get belted again, which I do think is a real possibility given what's going on in China. So can you hold it? Yeah, you can hold it. Can you buy it? No, I don't think there's a buy. I don't think the buy's on the table, but based upon the long-term trend, I think I can hold. But you know what to do, John. You've been listening to me long enough to find the levels you need to find. JLG looks interesting. We had Lytton under here, exit under here. It was heading up. This is a major supply event. You probably understand why I didn't get so excited about it. Major supply event, and it's for me, this is just the way I operate. I look at something like that with a big gap, and I go exit. I don't ask questions. Ask questions, and I certainly don't act in thirds as well. All out. That's just the way I would operate when I see something like that. It's not a matter of a third. It's a major supply event. I think that one is done and dusted. Okay, Chris asking about ARU. Merry Christmas to you, Chris, as well. Again, another one which was looking fantastically amazing. Gina Reinhardt taking a big stake in this one, but it is unfortunately gravity. The gravity of the rest of the market is taking hold and it's pulling back. It's really crucial now, Chris, to see how it reacts in this zone, because this is where we would expect to see some demand come in. So why? Because this is my short-term dynamic zone. It's where demand has come in the past to pump things up. So this is the area. If we can see a nice shadow coming in today, that would be very constructive. If we don't, then unfortunately, like everything else, it might well struggle. Are those two candles enough to cause you concern? Are they enough to say, hey, major supply event? Geez, they're not far off it, because if you blend the two together, they're almost as bad as this one was good, and they're really negating the good that's coming in that candle. And I've just done the update. You can see that it has started to build that shadow. So because it's very important to remind you each week that we're looking at a live candle, that last one, and it will change as the prices change. So we need to look at it at the end of the day. Anything I say today, which is based upon that last candle, you need to then look at it at the end of the day and then make another decision, okay? So hopefully that demand does come in and push it up here and show that this is a demand point. It would stave off potentially lightening the load if it were to close on the lows. And I only say that because I just think a bunch of unfortunate souls, let's just call them USs, USs, right? Unfortunate souls really got stuck in this one on the breakout because up and down, and now they're really having a crisis of confidence. And if you don't believe they're having a crisis of confidence, then I don't believe you've ever traded before, because you know the feeling. You know that feeling. Okay, let us keep moving. I'm going to go back to the streamers. Sorry, streamers, for neglecting you, but I will get to yours as well. NEU, Neuren Pharmaceuticals. How are we going on time? Not too bad. I'm encouraged by the white candles in here, and this one is for Andrew. So this is all good, but this is all bad, right? And you can see how much the bad is beating the good right now. So that's a reason for caution. It looks like the last time we talked about this, my guess was, you're looking at these two candles here. So I'm going to drag them over here so we can look at them more clearly. You can see where they were. I would have said something textbook, stuff I always say, which is, hey, if you see those two candles in there, that is a very good sign. And lo and behold, we actually got those two candles, but not before the rest of the market crapped out a little bit, pardon my French. So I think you need to go into damage control. I think you need to, we're saying this a lot, aren't we? Stocks that looked great, charts that looked great, that unfortunately have turned around. Your black candles, you close beneath that is your first sign. And then we're really looking at how we respond afterwards. And we're responding pretty well. Look, I can certainly go a hold here. I can go a hold. If you wanted to be a little bit more cautious and you didn't get out here, you're not far off that. So if you wanted to just light the load just as a precaution, that's not necessarily a bad thing either. It's not a buy, in my opinion, because quite a bit needs to happen now to prove to us that this area up here is being dealt with, because right now, that is now your big MPOS, right? So why would you be getting in here if you've got a big MPOS to deal with not too far away? So let us deal with that. So I'm encouraged by the candles and the price action. It needs to keep doing this. It needs to get back up there. It needs to deal with that supply and then hopefully kick again. So if you had to lighten the load a little bit, just as a precautionary measure, I've no objections to that, but holding on the balance, because otherwise, as I've said many times, this looks pretty good. But you have to understand, and I know I'm hedging my bets here a little bit, it'll certainly sound like that when I say, if the market goes south, in a big way, things turn really sour, nothing's going to be spared, right? They're all going to go down, even the great trends like this one. Okay, so just be a little bit careful there. Let us keep moving to Paladin, which I've done. SBM, this one is for Toma. Hey, Toma. Getting a little bit of a bid side on the back of the gold rally. I think last time we looked at it, we said, watch out for the supply zone. And yeah, there was some supply in here. You can see that upper shadow on the candle there, clearly supply. That's okay. Let's see how we respond to the supply that's come in. Okay, well, actually responded with a bit of demand. So I'm encouraged by this. And I'm encouraged by the fact that actually today is not terrible. Okay, so I can go hold on this one. I don't think it's a buy, and it wouldn't be a buy, I think, until we can close above 80 cents, until we fully until we can fully deal with that supply zone. So happy holder at this stage. Where would that thesis change? Look, on a close beneath 68, I think you're starting to move back into lighten or load phase again. Why? Because we're going to respect the fact that this is one almighty hell of a big downtrend, okay? And bigger picture supply is probably going to kick in around here anyway, right? So it's more of a speculative turnaround play. I'd be remiss if I was to say buy this one, okay? But I can get to a hold with some caution if it closes beneath. I think it was 68 that I said, okay? Let us keep moving to the next one, which is well, Sharky's got 3. I don't know if I can do all 3, Sharky, just on time. Hexagon Energy. Well, actually, I can probably do that one very quickly. There's nothing in there to suggest to me that the excitement is building, okay? That this is on the verge of exploding higher. Not to say it can't, but the volume's a bit sketchy, the chart's a bit sketchy, the candles are a bit sketchy, the volatility's a bit sketchy. Hey, let's get some volume that looks a bit like this. So the last time it looked half decent. So let's see that sort of volume, that consistency, yep, that magnitude. Let's see that happening again here. Okay, with some price movement, a close above 2 cents, and then we'll talk about it then. Until then, from a technical perspective, it's a pass for me. Because I can do that one so quickly, let me do your other 2. LIT, equally, ditto. Let us see. You look at when things are good, like when the volume that comes in, there's just not enough going on there. It looks pretty terrible to me. I should give you the other option, which is, well, I think the other one was hold. So I think Hexagon was a hold. This one, I can't see anything going on. I'd be leaning towards sell on this one. I can't see anything good going on there. And Novonix I'll do for you because I know it's very popular. It started to look good a little while ago. MPOS, DAR, POS, POSs, candles that need to occur for us to get excited, which never occurred. I think this one's pretty straightforward. It looks pretty horrific. They're buyers off the table, so I can say with confidence, and I'm happy to I like to put these things on screen because I come back later on and go, okay, well, that was a good call or a bad call. And it helps me reinforce whether my methodology is sound or not. Holds, I'm going to go 0% here, and I'm going to go sell 100% here, okay? And knowing full well that the market could make me look like a monkey and prove me wrong and do this tomorrow, but the probabilities, in my experience, would not suggest that that's going to happen. Okay, let us do ALL for Phil, which is looking like a great short to me. So I ran a scan on Friday looking for some short sells. So ABC came up. I think that looks really terrible. They've all got a bit of a property theme. Domain Group came up, and I talked about that on Friday on Ausbiz, and you can see that that has actually broken lower today. Bit of a white candle there, it's frustrating. James Hardie, which I think has a great deal to lose. I'm not sure if I've shown you, I tweeted the lumber chart. So have a look at the lumber chart. That is the US property market there, and James Hardie obviously is has major exposure to that. I think this is a big short here. I think you can take a short trade on that one. And then the other ones which have had a great run. There you go. I talked about this on Friday, and that one is starting to move now. There it goes. So bye-bye Reliance, and a little bit of a smirk, and some people say, hey Carl, I own that one. Like, bastard, what are you doing? But hey, all's fair in love and war. I'm not trading against you. I'm just trading based upon trends. And if you don't like it, then you can do something about it as well. Nobody's telling you to hang on to this stock till the day it goes, to zero, right? So, I can get some perspective. Short selling's not evil; it's perfectly legal, and it's a way to protect the rest of your portfolio in a down market. If you don't know what short selling is, well, you should. And if you're watching me on the recording, I'll put a link to my bear market survival guide in the post so you can download it. It's about 35 pages. I wrote it. It's not a company one. I personally wrote this, and I took great care in curating that material. So please download it, read it, understand it. If you are managing money, you need to know that stuff. In fact, head to Twitter. It's a pinned tweet. It's my pinned tweet, and you can download that bear market survival guide. Learn about short selling. Don't be a sitting duck. If 2023 turns out to be a bad year, and I've been telling you, there's a very good chance it's going to be for a long time now. If I'm right, you going to need to know this stuff. Okay, we got a bit off topic with the shorts, but ALL, to get back on topic, was on my list of shorts. So what am I going to tell you to buy this thing because it looks cheap now? That's not my style. If you would like somebody to tell you that your stock looks cheap, go find a fundamental analyst. Yep, they'll be all over it. Let us continue to look at our charts from Barry, a 31-34 EMA. I notice use on multiply markets. Does it follow other timeframes? No, daily, weekly, any time frame you can use the moving averages that I've supplied for you. So it's not 31, it's 21. That's why I'm getting confused. 21-34 there, Barry. Yes, no, he's corrected himself in the next post. Good one. So no, any time frame. I challenge you, go and prove it to yourself that those particular trends are dynamite, okay? I wouldn't use them if they weren't. Let us go to Whitehaven Coal, which is that one stock. Okay, Fran, we're not going to do this one, okay? We're just going to look at it. We're all going to just nod to each other, okay? So Fran, I'm nodding to you. Fran, you nod to me. Fran, nod to Michael. Michael, nod to Ryan. Ryan, nod to Barry. Barry, nod to Warren. Streamers, nod to each other, okay? Let's go to the next one. Let's just quietly, shh. Okay. Next one.